Gold is an asset that has been around for thousands of years. We all know that. The question that many people have is that will it go higher? Will it go lower? Where are we headed with the gold price? I'm consistently being asked that question. And in my consultations, they're wondering, should I put my money in gold? I'm really worried about the price considering the fact that it hasn't been doing so well over recent years, recent year actually. And despite this little bounce up, really it's been around that 12 to $1,300 range for a considerable amount of time, and people are really concerned that it won't go up. Let me just cover the fundamentals, and we'll go over that now, and you can see for yourself. You make that decision for yourself. Key driver of gold in 2014 is physical demand. See, while we saw a paper sell-off from the ETFs, we had actual physical demand increasing and really driving the price higher. See, when you say, gold is at $1,200 or $1,300 an ounce, that is really the futures market. The actual gold value, physical gold and physical silver, are really in high demand right now. It's very difficult to get in many regions around the world. So the actual physical demand is up. That's one important thing. In fact, the most important thing. This is out of the World Gold Council. Very important to get on their newsletter. They send out quarterly. Basically what they're saying is a fundamental shift had occurred, and a lot of the European central banks weren't necessarily purchasing as much because of their debt problems right now, but the emerging markets are actually filling in that void, and that's why we've had a lot of a bounce up in the price here, because the emerging markets are coming in, filling in the void for those other Western nations who are not buying the gold, and we have thousands of tons being purchased right now. So this is the four things that they cover: jewelry, investment, central banks, and technology. You can check them all out there. I'll spare you from that. This is from my book, and it actually sounds a lot like what was written just there in the World Gold Council. That's right off their website right now, actually. But it says that central banks are buying at record pace. So hundreds of tons a year are being purchased by central banks around the world, most notably in the developing nations. They're trying to diversify their US dollar reserves, which are rapidly depreciating. That's something that I talk about consistently. It's not the price of things going up, it's simply that the dollars are being devalued. If you price, as I do in my book here, if you price something like, for example, the Canadian real estate, it's red hot right now. Yet, when you price it in gold, the actual gains that it's had since, for example, the year 2000 haven't really been that good when priced in gold. So it's pretty interesting to, instead of pricing in those paper currencies, which are totally garbage, you price it in something real, and all of a sudden things change. China gold demand rising 25% by 2017 as buyers get wealthier. They're looking into gold as an alternative investment. They use it as jewelry. China right now is the #1 buyer of gold around the world for consumption. They use it, and of course inherently they know buying gold is safe over the long term, not necessarily because they want to sell it anytime soon, but they want to keep that wealth. They want to give it to their children, and that's the way they know how to do it, and it works very well historically because of, as I said before, thousands of years it's been around. Sure, it may not be a money maker. You may stay at 1,200 an ounce for the foreseeable future. However, we always know that you can take it, you can hand it down. Paper currency, on the other hand, cannot be handed down. It always devalues. Bright spot for India's gold demand. It is the #2 consumer, bet out by China recently, and it's talking about how India is basically, once again, those really big consumers of gold. They are really driving the demand for gold right now, that physical demand, not the paper ETF garbage. Here is a chart that's very telling. It's the US debt limit versus gold. So you can see this a steady correlation between the two that has occurred for many years, 2000 up until this chart goes probably till just under 2012. But you can see there is a general alliance between these here, and they're basically going up together in unison. And what does that tell us? That we can expect higher debt? That's pretty obvious. It's not going anywhere. It's continuously increasing. At the same time, you have a rising gold price. Now, do I necessarily suspect the gold price will go up? I can't really say that. There are many predicting that it's going to go to 20,000 and 50,000. However, I really think that if this hyperinflation goes on, we're going to have gold at near infinity prices. And if things are just necessarily bad, then we're going to, we can still see gold where it is. Why? Because it's not actually the gold, it's the gold futures market. Just like the stock market is totally insignificant. Why would anyone even look at these prices knowing that you have things like high frequency trading, the plunge protection team making sure everything stays the way it is, and you have all of these flash crashes that are occurring? The whole stock market's rigged. They know the way this works. This system is totally contrived. So when I look at the price, I don't really care about the price. I want my money to be held in an asset that can go on not just for years, not just for decades, but generation to generation. I want that to keep going. Gold is one way of many ways, one way to keep that going. So I do suggest people in my consultations, I tell them, buy what you're willing to keep in there, knowing that the price may go down significantly or it may rise as well. But it's not something to concern yourself over. Just keep the money in there. It's much better than having it in the bank, that's for sure. But of course, it is very important not to buy just gold and silver. You need to diversify majorly right now. Even Mark Faber saying you can't hide even in gold through what's coming. That's very telling, and I hope you enjoyed this video. Hope that you're also an insider. If not, it's very important to get on there, join the others on there. This is basically, a bunch of information that I didn't get to in my book, or it's an extension of what I did in my book, and you can get on there. It's totally free. It's at themoneygps.com. Just scroll down to the bottom, fill in your email address, and you'll get occasional emails from me with good, concise information.